Hey everybody, hey traders, this is Chris. Happy Monday. It is 12:24 Eastern Time, and just got settled in here to the office in Utah and just want to do a little weekly outlook. It's going to be a busy week for options, stocks, and currencies. All eyes on the Fed this week. Here's the calendar, and this week's trading Wednesday to Thursday. Lots going on. We have CPI coming out of Canada on Tuesday. We have the big bad Fed rate decision on Wednesday, which is expected to be a 75 basis points hike. Then, of course, we have the piggybacked BOJ, so the Bank of Japan going Wednesday night to Thursday morning. Press conference as well, Thursday morning, and then the Swiss National Bank, which was the surprise I saw last week. They're expecting to go from a negative 0.25% to a 0.5%. So between the dollar basket, the JPY, and the Swiss this week, lots of potential movement, volatility in Forex. And then to top that all off, we have another rate hike coming out of the Bank of England, expected to be another 50 basis points. So I think what I'll be watching the most, not just the day-to-day volatility, and of course our currency strength meter that we check, I will be watching this CME Fed Watch tool. And here you go. So 84% probability that the Fed will be raising 75 basis points. There is a small probability, a sliver, that they might go a 1% rate hike for September. No rate hike or no decision with the FOMC in October, so we have the big one in September, and then it's where do they go from here. But what we keep checking on is where is it supposed to be, or where does the market anticipate it will be by the end of the year? Because what we have seen so far is this December target continues to shift, and that is what is stoking, all the uncertainty and all the changes and what the Fed is doing. But as you get through the new year, nothing changes. So as an example, here's December of 2022. Let's look at December of 2023. The market is expecting the rates to be the exact same. They're not really raising rates. So all of the rate hiking is coming now, and this is what the market's trying to get a grasp on. And for that reason, this is why, for the most part in stocks and where we're at with the markets, this week is going to be really interesting for the following reasons. If the market does not like what the Fed has to say, then perhaps we see the market start to take out those June lows. And that would be a pretty horrible situation. We know that, it's been a bear market rally since we started this drop early in the year. But if the market goes down to make some fresh lows, that is fine. I've told traders this in stocks and options. I'm sticking with a majority of my trades being in options because we have the workability to own shares we want to own or just take very small losses and make everything manageable and keep cash at the ready. In currencies, if we have another drop lower in the equities market, the one potential concern, let me move this drawing tool over here, make it a little bit easier. The one potential concern would be the DXY continues to run higher. Now, we still have really high bar counts where we have a 200 EMA that's stretched over 260, 270 bars. We have the euro dollar with a high bar count as well. We have the dollar yen, of course, with a crazy high bar count. Oops, JPY. And, 145 has been a pretty decent resistance level, but as we projected, we talked about this in the flex room, I projected a monthly symmetry around 147, and we have that potential round number at 150. Other currency pairs I'm watching with the dollar basket, the dollar yen, of course, looking for correction, euro dollar looking for correction. As a hedge, I'm holding dollar Swiss long, and the dollar Swiss hopefully will come chew back into some of these pockets here at 97.50 or score a point for those bulls above 98.60. My long position that we took around 95.50, I'm looking to score some points up here and take some profit. As far as stocks and options, we have a big list of expirations from last week that I'm going in to start repairing. So all of my equities on demand students, I will get another list together of, here's the list. So we have Airbnb, BKR, CTRA, lots and lots. So we took some losses on credit spreads. We had some wins. We kind of broke even on the week, but I have a lot of need to add new credit spreads, and that's what I'm doing today. Is I'm just adding more credit spreads. I'm just going to see where I can add them, start chipping away my cost, and just do the same thing. We don't really have a ton of pressing expirations this week if I go into the spreadsheet for equities on demand. And sorry for this video, by the way, I am merging like the flex trading room and equities on demand, so bear with me. Forex students, I'll focus on some Forex. Stocks and options students, I'll focus on that as well. I wanted to talk about where we're at for the trade tracker. And I'm going to type in a search for 923 and we only have one expiration, and that was a USO credit spread. That's a 74 by 73, and I believe that might be another one that I rolled. If I didn't roll it, so we're 69.93 with the open right now. There might be a chance that it goes up, but I did roll. So I had a 916. I rolled it out to December. If you have a 923 with me like we took originally, again, if it doesn't pay, then I'll just take a loss, because the bigger picture for me is if oil's going to drop, I want to own oil cheaper, and I'd like to own USO cheaper. Back here past resistance around 58, really just around $59, and a yearly pivot all the way down here towards sub 50. So go to oil. We're seeing some pretty firm support right around that 85 area right there. And the bulls need to break it back above 97. The U.S. is talking about starting to fire things back up to replenish the special petroleum reserves. I don't know if that really has an influence on the price of oil, or if the Fed with raising rates continues just to crush demand and crush everything that is, has shown growth in the last 2, 3, 4 years or longer. We're just seeing a slowdown. That's really what it is. It's like not just a US slowdown, but a global slowdown, and that's bigger picture stuff. So this week there will be volatility. All right, we'll be watching the SPY. This 390 level, I've also mentioned this on my YouTube page many times. That's the line in the sand. We broke it, right? So we could be consolidating right here, but again, don't be surprised is if we technically break this level. I'll use a straight line here to make it a little bit easier. We break this level, and the market just consolidates prior to the Fed, and the Fed creates either another dramatic sell-off, or we have this massive indecision candle and the market breaks above or breaks below after. I would be more under the assumption that the Fed is probably not going to say something the market wants to hear. And because we breached that 390 level, this to me looks like a fifth wave. There's wave 1, 2, 3, 4, and a wave 5th completion would be taking out these June lows and settling in around those pre-COVID highs back in March 2020. Now, is there anything that the markets could do to react to the Fed in a positive way? If you go back to that Fed watch tool and somehow the market feels a little bit more confident that the rate decision for December is in fact priced in, and this is not shifting after the press conference on Wednesday with Jerome Powell, if we come out of this week with the Fed expectations still remaining around this 4 to 4.25% by the end of the year, and also staying there through most of next year, then that may be what is quote unquote the Fed pause. And that might be where the market starts to actually act and take this back up. So, if we truly have the market believing that the Fed pause is in because they're going to raise rates to a certain point, but not past it, then there may be a reaction to kind of get the bulls back in charge. Otherwise, Fed just pours cold water on everything, and it's easy to come down, take out these lows, and look for that pre-COVID high to be major support. And so I will be an active buyer, but I'll just be trading a lot of options. And traders should know this in the trading room. That's what we've been doing a lot of. We've done mostly credit spreads, lots of staggered credit spreads. Our next big chunk of expirations are out into October, so we're going to wrap the month up really over the next 2 weeks, just doing a bunch of covered calls on shares that we own to lower the cost basis. I will try to also get a stock like Alibaba and K-Web called away, but I want to see if we can, lower the cost basis more. I'll lower my cost basis if I can get it called away at $90. That's still going to give me, maybe $2 a share, and that's fine. If I think we have a big jump on here and it's all of a sudden trading at $93, $94, I'll probably roll that covered call or roll up my strike prices. So we will, do what we do best. We'll work hard, we'll grind, we will massage our numbers. And then in Forex trading, a lot of what I'm doing is auto trading. This, Perfect Storm Pro, Pockets Pattern Pro, and then just waiting for my time. Euro Swiss at 96.64, the Swiss National Bank this week. What's our big level? We talked about 9,000 as a massive symmetry point. What's our big level in the dollar yen? We've talked about 147 and 150. Okay, what about the euro dollar? Euro dollar seems to be doing pretty well, just holding parity right now. What about the dollar index? Well, we hit that 2002 supply zone. We still have a bar count. Is the dollar going to drop? Again, if the market's going to look to price in that Fed pause, we might see dollar weakness. Technically, it is due. My biggest concern is the market just doesn't like what the Fed has to say, and we stay overstretched and we stay overbought, and these technicals get further and further and further away to the point where we see it stretches, to the point of breaking. And when it breaks, we'll see this massive repricing. Okay. But this week is going to be something we have to pay close attention to. Schedule wise, equities on demand students, outside of today, since it was a travel day for me, Tuesday through Friday should be fine. I'm just going to be up way earlier since I'm 2 hours different than Eastern time. Flex students, let me confirm the schedule. This might be a week where it might be better for me just to do videos and do updates through Telegram and the Flex document, because I am 2 hours different. That would be starting my sessions at 6 a.m., which again, that's on me, not on you, but I'm just getting settled in. So I'm gonna confirm with the team, make sure that's not a problem. If you're okay with it, I would really appreciate it to just stay in touch via Telegram and do some video updates this week on Tuesday, Wednesday, Thursday. And what I'll do is I'd like to throw a bonus session in on Wednesday. Let's for sure do a bonus session on FOMC Wednesday. And I will either run it in the Flex room, so all you just have the Smart Trader login, or I'll just do a live YouTube session on my channel, youtube.com/Chris Pulver. So let me confirm that. Let's stay in touch over the next 4 to 6 hours, and look for an update there on Telegram or the documents. All right. But for this week's outlook, it's just a lot going on. We have 4 rate decisions coming. We have the market essentially, waiting on the whim of what the Fed is going to do. Where's the SPY going to go? Like I said, when we broke that 390 level last week, it seems like the path of least resistance is to the downside. But we have some indecision happening right now. And here's what I think. The bulls have to reclaim this 390 level. We really have to see a jump back into like $395 or $400. Otherwise, the bulls just hold it here for the bears to come in and just slap it down for another drop. And that could be all instigated on Wednesday, Thursday, Friday, with the Fed saying something that the market doesn't like. So we could have some risk off. We could have some risk on. And how many times have we had that conversation this year? Seems like it happens every week. What's the Fed going to do? What's the market going to do? Here's a 50-50. I've said this before. I've never felt like I've had to be hedged so much in my life in trading. I'm long euro dollar for the technicals, but I'm long dollar Swiss for a hedge. And that's also a pretty solid technical trade. And, that's just what we're doing. So I'm big on positions right now, just trying to weather the storm, wait for confirmation, get my alignments to step back in and, improve my cost basis a little bit and my overall net profits. And then meanwhile, in stocks and options, I am sticking with lots of expirations, lots of covered calls, and not dumping a bunch of cash. I did get assigned on one stock last week. That was CLF. We talked about that. And I'm just going to cover it this week and start drilling the cost down right away. All right. So I know the video is fast. That's how I talk. I talk fast. So slow it down, do 3/4 speed, do half speed. But anyway, nice to be here. It was a lot of driving in the last 24 hours. It was all of 24 hours of driving, and I didn't leave until like Saturday afternoon. So somehow I powered through and got in at like 2 a.m. But here I am. Here we are for the week, and it's going to be a busy week. But looking forward to it. Looking forward to catching up with everybody. Also, Mind Over Markets going on this week in MTI classes. So we will have a Mind Over Markets trading room that we'll be taking turns with. So I'll have a couple of sessions this week. Looking forward to seeing everybody that has access to it. If you're still interested in joining, you can reach out to your educational specialist and get involved with whatever sessions we have. We have our general sessions early in the week. Then we do VIP sessions on Wednesday, Thursday, and Friday. Or Thursday, Friday. Anyway, but looking forward to seeing everybody this week, and trading rooms as much as I can, business as usual. But like I said, maybe flexibility with the Flex room, doing some videos only. But we'll stay in touch. All right, everybody. Happy Monday. See you all soon. Thanks. Bye.